Traders War Room proudly presents the daily video with the best trading and investing alerts anywhere on any platform. With up-to-date stock, chart, and market news, TWR is simply your one-stop shop. Saturday Tech Video. Activate your 2-day trial of TWR All Access on the Discord platform. We cover it all at Traders War Room, whether you're looking for stocks, options, futures, Forex, crypto, or even sports betting, or you want real-time alerts, live trading, Algo signals, or even if you just want to be part of a community of like-minded investors to grow, learn, and share together as a team. Something for everyone at Traders War Room. Activate your 2-day trial today and go to war with TWR. Tech Video is going to cover what are indicators we can use to predict market trends. First, covering the basics of what an indicator is. Indicators are statistics used to measure current conditions as well as forecast financial and/or economic trends. Now, in the world of investing, indicators typically refer to technical chart patterns, like pictured above, deriving from the price, volume, or open interest of any given security. Common technical indicators include moving averages convergence divergence, or the MACD, relative strength index, RSI, and on balance volume, or OBV. In economics, indicators usually refer to pieces of economic data used to measure the overall health of the economy and predict its direction. They include the Consumer Price Index, or CPI, Gross Domestic Product, or GDP, and unemployment figures. Going into trying to understand indicators, we have to understand that indicators can be broadly categorized into economic indicators and technical indicators. So let's dive a little deeper into each of these categories. When we're talking about economic indicators, we're talking about statistical metrics used to measure the growth or contraction of the economy as a whole or sectors within the economy. Looking at the chart above, you can see that we're talking about 4 phases of an economic cycle, where you have expansion going into a peak, then contraction coming down into a low, and then going back into recovery. In fundamental analysis, economic factors that quantify current economic and industry conditions are used to provide insight into the future probability, highlight that word, probability, of potential of public companies. And what you're looking at when you look at these fundamental analysis is you're looking at industry analysis, economic conditions, future profit outlook, and company analysis. Now, technical indicators are used extensively along with technical analysis, and these predict changes in stock trends or price patterns in a traded asset. Such things as price action, chart patterns, indicators, trends, and entry and exit points are included with the technical indicators that underpin technical analysis. Now, when we're talking about economic indicators, there are many economic indicators that are created by different sources in both the private and public sectors. For example, the Bureau of Labor Statistics, which is the research arm of the U.S. Department of Labor, compiles data on prices, employment and unemployment, compensation and work conditions, and productivity. The price report contains information about inflation, import and export prices, and consumer spending, which we all know is a hot topic right now, specifically with the Fed in regards to rate hikes. And you can see the chart there, GDP by sum of spending factor incomes or output, and it gives you the idea left to right with expenditures, factor incomes in the middle, and value of the outputs. Now, the Institute for Supply Management, or the ISM, is a not-for-profit professional association for supply management and purchasing professionals. It has published its ISM every month since 1931, and this report contains a composite index of the Purchasing Managers Index, or the PMI, which contains information on manufacturing and non-manufacturing orders. The index is closely monitored and is a barometer of economic activity. The U.S. Department of Commerce uses the ISM data in its evaluation of the economy. Another indicator that drives information and decision points for the Feds are the real estate market. For most of the 21st century, housing and real estate have been leading economic indicators. There are several metrics used to measure housing growth, and they include the S&P Case-Shiller Index, which measures house sale prices, and the NHB Wells Fargo Housing Market Index, which is a survey of home builders that measures a market's appetite for new homes. Other economic indicators include interest rates on the money supply and the consumer sentiment. Now let's go into some technical indicators. In the context of technical analysis, an indicator is a mathematical calculation based on a security's price or volume. The result is used to predict future prices. Common technical analysis indicators are the moving averages, the MACD, and RSI. The MACD is based on the assumption that the tendency of the price of a traded asset is to revert to a trend line. Basically, you can see from the picture there, the MACD is on the bottom and the regular price action is on the top. When the MACD crosses, and in this case, it's the blue line is the actual line and the orange line is the signal. When the blue line crosses the signal line, you can notice on the chart the price action is indicating a buy because you have continued uptrending pressure. Note that when the blue crosses the orange on the MACD, you're noticing that typically a sell is there because you're noticing a trend to the downside. So you're looking for calls to the buy side, puts to the sell side, or if you're going long and investing, you're buying stock at the buy side and you're going to sell your position for profit at the sell side. RSI is the Relative Strength Index, and again, it's a technical analysis indicator that compares the size of recent gains to recent losses. The RSI is used to determine the asset's price momentum, either up or down, and again, this is a sub-indicator for an overlining top line chart with price action. You notice that you have the buy at the bottom because it's reached an oversold position, and it's noting that potentially a reverse to the upside is in order, and it goes up, and then you notice you get to an overbought position on the RSI and you sell your position. Again, that would be buying calls and riding them up, buying puts and riding them down, or if you're in the individual asset itself with shares, you're buying shares and you're selling for profit. Now, moving averages are technical indicators used to identify the general direction or trend of a given stock, and the purpose is to smooth out historical price data of generating a constantly updated average price. And the MA is moving in a positive position, that's bullish. And if it's moving in a negative position, that is bearish. Note here on the shorts and the longs on the chart above, the short position, again, we're selling stock for profit, or we're buying to open puts, and we're riding it down until we get the signal with the moving averages, again, to get the indicator for going long, and we're going to go ahead and buy calls or buy shares so that in hopes that we can sell the shares high for profit or ride the calls up and sell for profit at the top and ride puts down and sell for profit at the bottom. Now, note, using tools like the moving averages, the MACD, and the RSI, technical traders will analyze asset price charts looking for patterns that will indicate when to buy or sell an asset's under consideration. Now, let's talk about examples of economy indicators. And one of the big ones that we've heard recently is the Consumer Price Index, or the CPI. This is one of the most common economic indicators in that the CPI, because it's simply the weighted price average of a basket of consumer goods and services. Changes in the CPI are used to measure changes in the cost of living and to identify periods of inflation or deflation. Currently, CPI data is a major catalyst for market movements, both bullish and bearish, as we have seen time and time again. And if you look at the picture, we're talking about housing, apparel, transportation, education and communication, goods and services, recreation, medical care, and food and beverage. Another one that doesn't get as much press as CPI is PPI, and this is the Producer Price Index. And this measures the average change over time in the price domestic producers that receive for their output. It's a measure of inflation at the wholesale level, which then is compiled from thousands of indexes measuring producer prices by industry and product category. The PPI is different from the CPI, which measures the changes in price of goods and services paid by consumers. And the big ones when we're talking about PPI that we pay attention to is finished consumer goods, energy, capital equipment, and food. Now, the big one, gross domestic product. This is the one that all the presidents talk about when they're starting to go for election periods and stuff like this. This is the GDP, and it's the total monetary and market value of all finished goods and services produced within a country's borders in a specific time period. As a broad measurement of overall domestic production, this functions as a comprehensive scorecard of a given country's economic health, and this covers the food, transportation, education, recreation, other housing, and healthcare. And note that these are finished products, okay? So positive GDP, positive growth, means that the country is kind of doing well. You can think of it like A plus, B plus, C, stuff like that. Negative, falling down, the country is coming down. It's not making as much money. So we're looking at the C's, the D's, and the F's if you want to compare it to a scorecard or a grade card of sorts. Noteworthy, and we should go over these, they don't hold as much weight as the CPI, the PPI, or the GDP, but key performance indicators. And a key performance indicator refers to a quantifiable measurement used to measure a company's success against a specific target or objective. Common KPIs include net profit, sales, and consumer retention rates. Another one to take note of is the genuine progress indicator, and this is a metric used to gauge a country's rate of economic growth. It is often considered a more reliable measure of economic progress than the more widely used GDP figure. And when you're looking at this figure, as you can see in the chart, economic indicators on the left, environmental indicators, and social influences. These are the three categories that go into the genuine progress indicator. And finally, the big one that is on everybody's mind is profitability. So when you're talking about profitability ratios, you're talking about commonly used indicators of a company's profitability that include gross margin, operating margin, net margin, and return on equity. And as you can see from the chart, we're talking about gross profit ratio, operating profit ratio, net profit ratio, and then you got your ROCE, your ROI, your ROE, and your earnings per share. And then you have your BVPS, your dividend payout ratio, your PE ratio, and your ROA. Now, I know that those were a lot of acronyms specifically talking about profitability. Please check the description because I've given a link so that you can read more on the breakdown for those particular terms. So in conclusion, it is impossible to have 100% certainty on identifying a trend in the market. Economic indicators point one way, technical indicators point another way. The fundamental analysis attempts to bring an understanding into the bottom line objectives, etc., etc. But everything can stray away from the trends based off of catalyst type of events, such as a big news story or some kind of world political factor that just popped up, or general sentiment that shifts dramatically for one reason or another. However, having a grasp and understanding of many different factors can create a higher probability, there's that word again, probability of success when attempting to execute on a trade or an investment strategy. The term due diligence, or DD, is utilized so that individuals can take ownership of their individual trades and investments and not rely on a single point of failure. Furthermore, at the end of the day, it relies completely on the individual to do the work, make the educated decisions based off of intelligence, and create the highest success probability of a particular time frame. Many people have tried to time the market, and as the great investor Warren Buffett said, you can't time the market as it distracts you from making good decisions. Sometimes you just got to trust your strategies, trust the tactics, do your DD to gather and formulate your plan of attack, and then you got to pull the trigger and go to war. Make the market bend the knee in 2023. Join Traders War Room and bow to no one. Let's go to war. Logan told me she had multiple miscarriages. That's why they were afraid Jocelyn would have it.